Well, the latest reports are in, and in this video, I'm going to be sharing with you the good news and bad news about the housing market, as well as, is it possibly time to buy? I know this sounds like a crazy statement considering where interest rates are currently sitting, but the picture is looking a lot better for buyers right now, and that's exactly what I want to share with you here in this video. So let's get into it and talk about housing and where this crazy market is currently sitting. Now, over the last couple years, this market has been very, very weird. For a couple years there, it was nuts. The market was absolutely 100% on fire. Houses were selling very, very fast. Multiple offers, prices well over asking price. It was nuts. It was really difficult for a lot of people to buy a house because prices were moving up so rapidly and you had to bid so much over asking price. A lot of people, unfortunately, could not buy anything during that time. And then the Federal Reserve came in and started raising interest rates. Well, this cooled off the market very, very fast because we went from interest rates being right around 3%, give or take a little bit, which is very, very low. That is like historically low when it comes down to interest rates on mortgages. And now, currently, as we speak, we're sitting right around 7%, give or take a little bit. Sometimes it dips down below into the high 6% range, and sometimes it goes up to kind of the near 7.5% range. It is crazy to see this going on, but in relative terms, these 7% or give or take a little bit interest rates is very, very high relative to where we've been the last couple years. So for a lot of people, they've been completely priced out of this market and they can't even get into it and buy right now, which we're seeing. So again, buyers are looking for any amount of reprieve right now. Hey, we got to get some relief on this thing. Interest rates, prices, give us something. We got to get something to make this more affordable, right? But anyway, I want to share with you the details of some recent reports right now because this may be coming in and we may be seeing some reprieve for buyers finally, okay? Now, it's not necessarily coming from the Federal Reserve, but it's based on other factors that are coming in. However, I want to point this out really quickly. Sometimes when we face situations like this, it's easy to think, oh, it's never coming back down again, okay? We think of that all the time. Like, for example, if you see like a stock market crash, a lot of people are like, oh, it's never coming back. It's never going back up again. It will. It always does, and it always will going forward. But my point is, okay, so when we see the interest rates currently where they are right now, right around that 7% range, it's easy to think they're never coming down again. I can tell you this much. If they don't come down, this market and this economy, this country will be absolutely crushed if these interest rates do not come down within the next year, year and a half or something like that. If they let these interest rates sit where they currently are for at least a little bit longer here, this economy, this country will be absolutely flattened. There's no possible way these interest rates can sit where they are. I'm just telling you that right now, okay? It's not going to be that much longer until we see these rates come down. Probably sub 6%, probably even sub 5%. I would not be shocked one bit within the next, call it year and a half, 2 years, if we see interest rates back down in the 4% range, maybe low 5% range. I would not be shocked one bit. In fact, I 100% expect that to happen, okay? There's no possible way we can continue with these interest rates at the pace that they currently are. It will crush everything. It cannot be done. It is not sustainable. This is fine for a little while. They're crushing the economy. They're really contracting this economy right now, but it cannot persist very long. If it does, you might as well kiss this economy goodbye, okay? Because it is not going to happen for very long. I can tell you that much anyway. So if you're worried about these rates never coming down again, don't worry about it. They will eventually, guaranteed, okay? It is not sustainable whatsoever to sit with these rates this high. But anyway, sorry, I digress for a minute, okay? I know. All right, so let's get into the reports here. I'm going to tell you the good news first, okay? So we have to look at the market in a couple different, lenses. I know it's kind of hard to believe, but on just last month alone, okay? So when we look just last month on a year-over-year basis, the amount of supply or inventory on the market, as in active listings right now, is up 35.2% year over year. That's a lot, right? Remember, if you've been watching the videos here on the channel for a while now, what do I talk about all the time? Supply and demand, okay? When we see an influx of supply like this onto the market, that's good for buyers. Why? When you have a supply and demand imbalance, when there's more supply than there is demand, guess what has to happen? Simple economics. Price must go down. Simple economics. It has to happen. Supply and demand happens every time, okay? So, considering year over year, we haven't had an influx of buyers, I can tell you that much. I mean, I watch these markets all the time. Buyers are nowhere. It's like crickets. Where are the buyers? they're not there. There's there's nobody, okay? So anyway, considering we've had inventory increase by 35.2% year over year, this is good. More supply on the market means prices must come down, okay? So that's one factor alone. Now, if we look at pricing of homes, okay? So if we look at the price ranges between $200,000 and $350,000, and again, this is across the entire country, okay? Prices between $200 and $350, okay? Between that price range, year over year, just from this last month here alone, the amount of homes on the market, as in the inventory, has gone up 46.6% just in this 1 year's time, okay? In that price range of $200 to $350. That's great. That is awesome, okay? Now again, they said that this is low price housing. I don't know. I mean, a couple years ago, for sure, this would be low price housing and things like this. And maybe this is still considered low price housing, but I don't know. That still seems kind of high. I mean, $350 to me still seems pretty high. I would not really consider that low priced housing. I mean, maybe like $250 and below, but $350, I don't really know about that, right? But also the reports are now showing as well that right now the median price out there across the entire country, median price is $442,000. Nearly $500,000 is the median. That's crazy. In my opinion, that seems like a very high median, but that's what they're saying right now is 442. Obviously some change on that as well, but I'm just saying 442 for easy math and easy rounding purposes, okay? It's a lot of money, right? It's a lot of money to pick up a house. So anyway, I want to bring that to your attention. So that's the good news. Okay, so that's what we're looking at there. Now let me share with you the kind of the baddish news a little bit, okay? So we got to look at pricing from a couple different angles, okay? So first off, you're looking at prices, different things like this. But what I like to do is I like to look at price per square foot. This is a metric that I look at literally all the time. Every single house that I look at, I'm always looking at price per square foot because it gives me an apples to apples comparison, okay? If I'm just looking at this, 3-bed, 4-bath, 2,000 square foot house is selling for $350, and then the house 2 doors down is selling for, $310, and it's a 2-bed, 3-bath. Well, what's the difference? Why the change there? Is it because of one less bedroom and one less bathroom? No. So again, I like to look at square footage. It just kind of gives me a better metric. So if we look back to May of 2019 to present time, we can see that during that time frame, listing prices have gone up by 37.5%. Not a bad return in about, 5 years or so? Not bad whatsoever. However, if we look at that same time frame and we look at it on a square foot basis, in other words, dollars per square foot, during that same time frame, prices increased by 52.7%. It's a lot, right? So in other words, this is a metric you certainly want to keep your eyes on. And a lot of times it shows it right there in the listing as well. For example, you look at a house and it says price is, $300,000, and it might give you a little number beside that or below that that'll say something like $150 / square foot, right? Just keep an eye on that because here's the thing as well. It'll help you with negotiations. For example, let's just say that you're looking at, 2 houses that are maybe in the same neighborhood or maybe a few streets over, or they're relatively close to each other, and the homes are, relatively priced and things like that. But you look at the square foot metric. In one house, you're looking at a square foot price of maybe, $150. And again, I'm just making up a number for easy math here, okay? You're looking at one house and it's priced at $150 per square foot. Meanwhile, you look at another house, 3 doors down or 2 streets over, something like that, in the same proximity, and that one is priced at $175 a foot. Seems weird. That's a $25 per square foot price difference. It's a lot, especially when you're talking about a couple thousand square feet. You're talking a lot of money here, right? So unless house number 2 can actually justify that extra $25 more per square foot, like a lot of new upgrades or something like that, newer build, I don't know. There's a whole bunch of different reasons why it would actually command a higher price than that. But if it can't, then you might look at it and think, okay, then why is house number 1 priced at $150 a square foot? I'm going to look into it. Maybe it needs a bunch of work. Maybe it, needs a bunch of upgrades or something like that. Maybe it has some structural damage, or maybe it needs a new roof. I don't know. You look at all those details about it. But if all compares and nothing, structurally is wrong with house number 1, or it doesn't need any major upgrades or repairs or anything like that, and house number 2 does not seem all that much more better than house number 1, then you may go back and think, this is grounds for negotiation, right? You can come back and think, hey, I'm going to offer something a little bit less because why would I pay $175 when I can buy a house, the next street over for $150? It doesn't make any sense, right? So you can maybe structure your offer and say, based on the comps, based on active listings in the area here, there are other homes selling for, or listed, I should say, not selling, listed for $150 a foot. Therefore, maybe I'll offer $160 a foot, something like that. Again, I'm just making up some nice round numbers here for easy math and just, example purposes, but you get my point here, right? So again, use this to your advantage. This is something that I always like to look at. I always like to look at many different metrics when looking at all kinds of markets. And again, I watch all the markets very closely. I'm watching stocks every day. I'm watching crypto. I'm watching ETFs. I'm watching bonds. I'm watching real estate. I'm watching all of it every day because it's all highly correlated. If money goes from one market, guess where it's not? Guess where it's probably going to go? If money is not going into real estate, guess where that money's probably going to go? Probably into crypto, probably into stocks, things like this, right? If money is not going into stocks and it's, being pulled out of stocks and crypto and other things like this, then where may it go? Gee, I don't know. Real estate, probably, right? So they're all highly correlated. Why you probably want to keep an eye on all of them. And it's exactly what I do as well. So anyway, I found these reports to be interesting here. So either way, one thing that we do know is that, okay, fine, maybe right now is not the best time to sell if you're in the market to sell, but it is getting to be a great time to buy because there's no buyers. Where are the buyers, right? If you look at any markets around the country, yes, some markets are still relatively hot. Coastal markets, by the way, are generally the hot ones. But there are plenty of places around the country. If you just look around, which I always like to do, I look all around the country to see what's going on in different markets around, but you'll see a lot of price cuts happening right now, okay? There's some sellers out there that are in the position of, I need to sell, and I need to sell relatively quickly here, okay? And again, I don't want to say you should take advantage of anybody. I'm not saying that whatsoever, but there are some deals out there for sure. You just got to look around. You have to look at a lot of properties in order to find the deals, but there are definitely some out there. And if this market continues at the pace that it is and buyers are nowhere to be seen, interest rates stay high, and pricing, is just doing what it's doing, there's definitely going to be some opportunities out there to find something relatively cheaper, I want to say, or some opportunities where there may be some opportunity to negotiate with potential sellers that just need to offload a property. Make sense? Anyway, I'm going to leave it at that for now, but it's looking a little bit promising for buyers. I know interest rates are not good right now, but I can tell you this much. As soon as interest rates come down, you're going to see a flood of buyers, and then guess what? All the potential homes that are available, they're going to be all eaten up by buyers. My point is, it's a good time to buy when other people are nowhere to be seen, right? It gives you the most leverage. If you're trying to compete with other people, do you think that gives you leverage? No, never does, right? But if you're competing with yourself, you have all the leverage in the world, right? So anyway, I'm gonna leave it at that. Please subscribe down below if you haven't done so. Share the video, like the video down below, subscribe down below.